Morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address, r@fxcm.com. Today is Wednesday. It's the 2nd of Feb, 2022. Just going to bring up our high-risk investment warning and then the commentaries disclaimer. I'm going to be quite quick in our webinar this morning, and I duly apologize, but I believe there is going to be some power outages in my area, so I want to get as much covered before that happens, and that's due in the next 15 minutes. Hey Howard, yes, very well, and I hope you well as well. Apologies for yesterday. I just had an emergency come up and I had to deal with that. Let me just bring up our market commentaries disclaimer. I'll keep this on screen for a few moments, and there will be this time there will be a US Open webinar this afternoon. So if you'd like to join for that, please log in. Here's our references: FXCM Market Scope 2.0. We will do the CNBC morning note as well. Hi Michael, morning to you. Nice to have you on the webinar as always. But before we get into the CNBC, just because of our time constraints, we're going to do the charts first, and then we'll take a look at the headlines and see what we have to be aware of in terms of headlines. So let's start off with the weekly chart. All right, so for this week, so far so good in terms of technical analysis. The idea here is we know this support is obviously a level that the market is keeping an eye on, and it's no surprise we're looking at about 15,000. So 15,000 is a key level with regards to the DAX. But in terms of our reference candle reversal, we've still got 3 days of trade, so we don't know quite where we're going to end. This candle here is still the active candle. Okay, so because it's the active candle, it's looking bullish now, but I don't know where it's going to end. So come Friday, we might have a lower close, or we could have a higher close. As it stands right now, it's looking pretty good. We've got our 3 points. So what's our 3 points? So the first point is it's the lowest low in at least 3 candles. So here's the lowest low. Here's to the left a high low, to the right's the high low. That's condition 1. Condition 2, it takes out the reference candle's high. Well, it's done that. And then, of course, condition 3, it's got to close above the reference candle's high. But we don't, at the moment, price is trading above the reference candle's high. We don't know if it's going to close above the reference candle's high. But if it does close above the reference candle's high, well, that's what's needed for a swing. Every single swing that you show me, I'll show you these 3 conditions. The issue is, and this is what makes it so hard, is that the 3 conditions don't necessarily lead into a swing. They might just sort of peter out, and we might see. So this is the example that we drew on Monday, and then of course we could get just a sort of a capitulation. So even though we've got the 3 conditions, but if there is going to be a swing, well, you need those 3 conditions. So there's a caveat. We're pretty close to getting to the 3 conditions. Do they guarantee anything? Absolutely not. But without them, we don't get the swing. All right. So we're just going to have to wait and see how this closes towards the end of the week. But when we go through to our daily chart and we understand that the weekly is looking pretty good, then we go through to the daily, and I want to do it on this chart here. Same thing, just without the oscillators. Okay, so I just want to take a look at this in terms of our zones. Let's just label our zones here. So we've got 3 zones: a bear area, a bull area. We've got a bear area, and in between we've got the neutral area, right? So the more time we spend in the neutral, the more chance of going sideways. The more time we spend in a bull area, the higher the chance of a swing up or some sort of trend. The more time we spend in the bear area, well, that's the greater the chance we'll see weakness. Okay, but I think where the real analysis for this type of call it a map is in terms of a relative nature. In other words, where are we relative to where we were, right? In other words, we've moved out of bear and we're sitting in neutral. Well, that's actually a bullish development. Okay, although we're not in the bull area, the fact that we've moved from weakness to neutrality, well, that's a step forward. So we've got on the daily chart a positive development, and on the weekly chart, well, as long as we can get some sort of support off of the daily, then maybe we get these three conditions. So I like the fact that obviously we've moved out of the bear area, but you can see we've got some red there now. Okay, well, I like that too, actually. I like the fact that there is red in the strength, because that's exactly what we look for in the webinar. That's exactly what we look for. What do I mean? Well, we look for dips in strength to see if they're exploitable, right? So we look for these pullbacks to see if they're exploitable. Now, again, there's no guarantees here. Okay, so but if you can kind of catch these corrections, and chances of catching them at the very low are slim to none, but if we can get in pretty close to the low, that's exactly what we're looking for. So now we've got some red, okay, and we want to see, is that something that we can potentially exploit? So let's take a look at the hourly and see if the hourly gives us the opportunity. The hourly is really kind of now zooming right in. We don't usually go lower than the hourly. I think that's pretty close to price action. And you can see the hourly here isn't looking all that badly either. Let's start with the stochastic, which is this middle indicator here. I think everyone on this call knows, and if you don't know, I'll make the statement. The stochastic for me is my favorite indicator. I know there's plenty traders out there that use price only, and you know, clearly that's fine. All indicators derived off price, so there's going to be a lag. What the stochastic really tells us is strength of momentum. And the best way for me to explain it is that what a stochastic is doing is that it's looking at range. Okay, it's looking at range over a period. In our case, it's looking over 15 periods. Okay, so we've got a range over 15 periods, and within those 15 periods, in this case, it will be 15 hours. There's going to be a high. And what happened there? There's going to be a high, and there's going to be a low. Okay, so there's a range, and then if you take a look at we've got a percentage reading here. It starts at 0 and it goes to 100. So if we've got a stochastic that's sitting at 100, well, it's telling us the current close is sitting at the top of the range. That is momentum. Okay, if we've got a reading and it's sort of below 20, close to 0, well, that is weak momentum. Okay, so this is a terrific momentum indicator. We just got to understand that the slow stochastic does suffer from lag, and in this case, it's got a 5-period lag. When we do our US open hours, we apply a 0 lag, and we're using a fast stochastic because we want to know the range without any lag, because it's a scalp, right? That's what we do in the US. But over here, I'm satisfied that we've got a lag here, because it shouldn't impinge on our ability to catch swings. It shouldn't. Okay, as long as we understand stop losses and risk management. Okay, because without that, any method you use is going to eventually fail, because you must have risk management. But Where are we with the stochastic? Okay, we're in the upper quintile, we're above 80. That's momentum. Okay, there's no overbought condition with a stochastic, there's no oversold. It doesn't exist. Any textbooks that tell you that it does don't understand mathematics. Okay, so we are sitting in the upper quintile on a good-looking weekly, on a good-looking daily, and now we just want to see if we can get momentum working for us. So what are the caveats here? Well, if we drop out of 80, then the momentum is starting to wane. It's starting to wane. Okay, so any sort of pullback here, say to the central pivot or to the S1 level, any sort of pullback there, that's kind of what I'll be watching to see if those levels bring buyers in, bring the short-term traders in. And then if we have a strong momentum, okay, then we keep to our trend following indicators. Those are the EMAs. We want to see the EMAs cross. Okay, so the EMAs are trigger 1, the stochastics trigger 2, and even if you get the triggers without the stochastic maintaining above 80, there's no real the odds of a swing are much less without momentum. So just to give you an example, the last sort of momentum I can see here is over here. Okay, so you can see that's hanging around the lower quintile. Here's the swing to the downside. It's a counter. That's sort of counter to what we are talking about today, but it's probably sort of somewhere down here. But the point is, without momentum, very unlikely that anything happens in terms of swing. Maybe a scalp, but again, this is not our scalping webinar. US Open's our scalping webinar. So if we drop out of 80, that's it. Okay, the momentum's starting to wane. Then we've got to be careful. Then we've got to watch to see if we're actually going to get this moving down. Okay, and if it closes below here, that's not good. It's not good for next week because we need 3 conditions for a swing. Okay, weekly is the primary. Okay, so we're looking good, but I think that the momentum has to hold, and we need either the central pivot or the S1 to act as key levels. In terms of the RSI, well, we really just use the RSI for overbought, oversold. There's where the overbought, oversold comes in, because stochastic can't do that. RSI can do that. We're not overbought. So I think that there is potential here. Let's just see if there is a 2-3 correction. All right, I'm just cognizant of time here and worried we may get a power cut. So let's quickly just run through the CNBC morning note. Hey Anna, morning to you, and so nice to have you on the webinar as always. All right, I'm just going to run through the headlines. This is from CNBC.com. Starts with European markets head for higher open amid global gains. And European stocks expected to open higher on Wednesday amid positive momentum in global markets. The higher open forecast for European markets comes amid gains elsewhere this week. In the US on Tuesday, the major averages rose for a third day as stocks attempted to come back from the tumultuous January. The S&P 500's worst month since March 2020. US stock futures were mostly higher overnight ahead of the release of private payroll data on Wednesday. Economists polled expect 200,000 private jobs to be added in January, down from December's 807,000. Remember this Friday non-farm payroll, we will have a live trade there. Live trade, live account. I think the last one wasn't too good. Our stop was hit. I think the one before was pretty good, if I remember correctly. Meanwhile, in Asia Pacific's overnight, shares rose in Wednesday trade, although markets in mainland China, South Korea, Hong Kong, and Singapore remain closed for the Lunar New Year's holiday. I beg your pardon. All right, let's just see what else is here. On Tuesday, European markets had a spring in their step during the first trading session of February, but the Pan-European Stock 600 index still closed out its worst month since October 2020 as investors reassess their allocations amid fears over higher interest rates. That's the key. We're going to have to just see what happens with these. But the pullbacks. So what are we always looking for? Pullbacks. We want to take advantage of pullbacks. January was a pullback. We're still in a bull market, understanding that interest rates can potentially put pressure on valuation, on the present value valuations. So we're keeping an eye on that. Investors in Europe, keeping an eye on tensions between Russia and Ukraine. And I'm just going to jump to the bottom. Earnings come from TeamViewer, Ferrari, Santander, Julius Baer, Glencore, Novartis, and Vodafone. Data releases include flash Eurozone inflation figures for January. All right, so I'm sorry I rushed through that. That's just because I'm expecting a power cut imminently. So if I disappear, I would duly apologize. Anna just asking, are we doing cryptos? I'm going to jump to cryptos now, Anna, but there is a power outage that is scheduled, so just be aware of that. I'm not sure it's due now, but so far we're still online. So let's see if it holds out. Let's jump through the cryptos. We usually do cryptos on a Wednesday. I do it in a separate webinar, but I'm going to continue in this webinar. I'm just going to add in Bitcoin. Let's take out this currency. We don't need it. Let's put in Bitcoin here. Alrighty, so similar analysis, top down, okay, from the top down. So let's just take a look at this in terms of pure charting. Okay, this is what we wrote last time. There's cryptos always have emotion. It's just one of those things. It's like a I think part and parcel of being a crypto trader. But because there is sort of an emotional attachment, I just want to stress you must have an exit plan for your trades, as with any trade. This over here is an interesting chart itself. We're at the weekly. So here is condition 1. Here is condition 2. Okay. What we're lacking is condition 3. Condition 3 is this is a weekly chart. We'll only know it. We'll only know it on Friday if we close on Friday, and that's because our close is Friday. But Bitcoin does trade over weekends. Emotions are elation or sadness. In terms of trading, we look at it in terms of greed and fear. Generally, ego is there as well. So how it's just so when we say Bitcoin is accompanied by emotion, it's usually sort of greed or fear, and I think the ego is certainly in it there as well. All right, so we kind of not sure if this is going to be a reference candle, but you can see here 1, 2, 2, 3, 1, 2. Okay, let's get rid of this. I've got too much aqua or turquoise on my screen. 2, 3, perhaps? Question mark. Okay. So our candle finishes on a Friday, I believe, and then the Monday candle would incorporate the weekend move. Okay. So I believe that's the way it works. Let's just put in our peaks and troughs. Peak, trough. Okay. This is a lower peak. This is a lower trough. All right, so that's a definition of a downtrend. If the downtrend continues, then what we're looking for is some sort of lower peak. Now this is a little bit different to the DAX chart because the DAX chart doesn't have a trend. Bitcoin does have a trend. So we go through to back to the DAX. I've only got 2 points here. I don't have 4 points. We've just got a peak and a trough. Okay? So there's no lower peaks, no lower troughs. It's different to Bitcoin. Bitcoin. On this leg, lower peak, lower trough. Are we going to get the next lower peak? Now, let's just go through to our. Sorry, this is not. Let me just link this up here. Let me link this to Bitcoin. Okay, so we have pushed through from the zone 3 into zone 2. So it has moved relatively from the weak area into the neutral area. Again, I don't see this as quite as strong as DAX. Remember, DAX is moving off no trend. So if we go through to DAX, it's almost a completed 3 conditions. Not so on Bitcoin. Bitcoin, we've got only two on the weekly. Okay, and this is a spinning top. Okay, what's a spinning top? You've got all these kind of really cool names, but forget about the cool names. Let's understand the sentiment. Well, you've got bears that have tried to push price down. You've got bulls that have tried to push price up. We're kind of sitting in the middle. It's a candle of indecision. A candle of indecision on the weekly. Well, we go to the daily. Yeah, okay. Well, we're sitting on the border of zone 2, zone 3. Take a look at the direction of the Bollinger's. They are still angling down. Okay, so there's still, I think, question marks around Bitcoin. Now, let's go back to the weekly. So what's the big deal? Where's all the strength coming for? Where's all the strength coming for Bitcoin? Don't know. Let's add the dollar. See if the dollar's got something to tell us here. Yeah, exactly. Small candle to very sort of unemotive candle this. Let's just see if the dollar can perhaps give us some sort of insight here. So just going to add the US dollar. Great. All right. It's not as clear as I would like, but anyways, let's at least put in the points that we can have the most agreement over. So the bottom of the US dollar, coincides with the top of Bitcoin. Okay, coincides with the top of Bitcoin. For me, that makes absolute sense considering BTC is the numerator, USD is the denominator. Just makes sense. The denominator is increasing, is going to put pressure on the numerator. I think that's what we're seeing here, which now begs the question: demand and supply forces on the numerator side versus demand and supply forces on the dollar side, and that's the big debate. That's the big debate between crypto bulls and crypto bears. Okay, and again, I would suggest that that debate has not been concluded yet. I think it's quite vocal at the moment. However, what we can say, I think, is that let's clear a lot of the stuff up here. Let's take this out. Take this out. Let's take all of this out. We'll keep that in. All right. What we can say, we can make some inferences, is that the dollar is up. Okay, that's what we can say. We can also say that Bitcoin is down on an absolute basis. The correlations here are are not particularly strong. After the 20th of February, this, the correlations are not quite, you know, correlations, coefficients go between 1 and -1, right? Between 1 and -1. So I would suggest that this part over here is pretty close to -1 because it's almost perfectly inversely related. Not so much here, not so much to the right of this blue vertical, but it still would be a negative relation. Okay, so it would be much closer to the 0 line than say the -1 line, but it is on the negative side. So there is an inverse relationship here. It's not quite as strong as prior to the blue vertical, but it is suggesting that the battle between the numerator, the denominator, is being dominated by the US dollar, although the numerator is still sort of battling it out, it's still fighting out. So again, it comes down to, is there that intrinsic value for Bitcoin? I'm going to suggest that's part of the debate. That's part of the demand supply debate between numerator and denominator. Crypto bulls swear by it. You know, the crypto antagonists certainly would be completely on the other side. So the idea here is where are we going forward? What's going to happen going forward? Well, if the correlation is on the minus side at the moment and subject to change, so the thing about correlations is that they're in flux, constantly in flux. You'll never get a correlation that's permanently at 1 or permanently at -1 unless you're looking at something like the DXY and US dollar, because it's effectively the same instrument. They're in flux because of the dynamics of the financial markets, right? So we've got 1, 0, and -1. These are the three big ones, where 1 is a perfectly positive correlation, -1 is a perfectly inverse correlation, and 0 has 0 correlation. Okay, I would suggest if you take a look at the absolute value of the US dollar to the absolute value of Bitcoin, we kind of probably, I mean, we can put it into an Excel sheet and work it out, but we're probably around about here. I would suggest kind of -25 as a sort of as a guess. So given that it's negative, and given that there is a huge potential for US dollar appreciation. Why? Because interest rates are going up in the US, because the Fed balance sheet is going to be shrunk. That's dollar supportive. If this -25 correlation continues, then we'll probably get a gentle slope down. And it would be imperfect. So you'd have kind of your your waves. So you'll kind of get your bear market rallies that would be, and if you've got that emotional attachment, that's hugely dangerous. Now, that's kind of the school of thought that I'm in, but I could be wrong. Okay, the argument against that is that, well, the Bitcoin actually does have more value than we give it credit for. In other words, the rate of change on the numerator side is stronger than the rate of change on the US dollar side. I don't feel that is sensical, because I think that the forces on the denominator side are extremely strong for 2022. But as I say, you know, that's the side I'm sitting on. I could be wrong. If for some reason Bitcoin shows resilience and the rate of change for Bitcoin is faster, well, then we'll get it moving up and we'll get US dollar moving up. It's just that the numerator is outpacing the denominator. That is what we've got to do in our next week, in our next analysis, is we've got to keep looking and seeing, does Bitcoin have the legs to outpace the US dollar? I have my doubts, but of course the Bitcoin bulls would say, well, Russ, you're ludicrous. There's an incredible intrinsic value there. Just wait and see. Well, we're going to have to wait and see. Anna's just saying she looked at a correlation between the Bitcoin and the Nasdaq. There could be. We can put in the Nasdaq here. I've got to think about it. I'll give you my initial thoughts, Anna, and then I'll have to kind of just work my way through the thoughts. What about down here? No, that's not right. I want it on a separate. I want it underneath. Okay, so we've got Nasdaq. Let's get rid of this one for the time being. Okay, so we're looking at Nasdaq and Bitcoin. I don't see it offhand. When we talk about correlation, we've got to be careful. Because correlation can be, now it's a fancy word, but they call it spurious. In other words, it could just be a fluke. It could just be that the market is exhibiting a +1, -1 type of correlation. We've got to go deeper than that. We've got to understand, is there an economic reason for the correlation? Otherwise, it's most likely spurious. So if there is a relationship between the Nasdaq and the Bitcoin, the first thing we've got to do, and is we've got to eliminate if it's spurious or not. Okay, we probably could delve into it if we think about it in terms of interest rates. So interest rates, in my opinion, are going to hurt Nasdaq. Okay, so Nasdaq drops. But at the same time, my opinion is it's going to hurt Bitcoin because it's going to be positive for the US dollar. So we probably should move like that. So that will kind of be the economic justification for some sort of correlation. I'm not sure what the idea was, behind what you watched, but correlations, we must always try and make sense of them to see if there is, otherwise they could be accidental. Also, correlations don't have to be Bitcoin to Nasdaq. There could be something in between. There could be a third variable. So it could be Bitcoin to US dollar, Nasdaq to US dollar. So that possibly could be the linkage. That could be the linkage. I was looking at the RSI. I think I would imagine that's going on a limb, but gee, I don't want to say that because I haven't seen the analysis. Maybe you could send me the link. Risk the link. Maybe you could send me the link. I'll take a look at it. I just want to say from next week, I'm off for 2 weeks. I'll be on study leave for 2 weeks from next week. So, but I'll take a look at the link. I think it's very important that if we're going to use correlation, I love using correlations. It's really a good way to add to analysis. I think the thing to do then is to always try and get some sort of economic link to it, some sort of justification. Otherwise, and I'll tell you, I'm going to end off. I'll end off here because there is biases in sampling, and technical analysts often, and I would include myself in this, often are subject to huge backtesting biases. And the one that we are most susceptible to, is sampling bias, which is also called data mining. I don't think actually sampling. Let's call it data mining. So if you give me a set of data, so what is data mining? If you give me a set of data, I will test that data until I find some sort of relationship. If I test it enough times, I will find a relationship, okay? But that's, I've mined the data for a relationship. It doesn't mean that there's a relationship there. It's got to make sense. So this is a huge bias in any hypothesis testing, but technical analysts make this mistake huge. That's why when you are testing a system, you've actually got to break it down into three sample sets. You've got to have in data sampling, out of data sampling, and then you test it in the real world. There's kind of three levels of to make sure you're not sort of seeing something that's not really there. So I don't know whether this is a case of data mining, but I'm just putting the possibility out there. All right, I'll send the link. Before I send a link to everyone, let me just take a look at it. I don't want to send it around. Let me just. It sounds to me like there could be some sort of bias there. All right, guys. Let's conclude at this stage. Thank you very much. It looks like the electricity, the power stayed on. I'm very glad for that. You've got my email if anybody needs to get hold of me. Thank you very much for joining. Please join me this afternoon for the US Open webinar. All right, cool. All right, guys. Speak to you later.